Let's start off with the bourses that actually came under significant pressure. We saw the Egyptian market losing almost 4.5%. No surprise there, because this market actually has had a fantastic run since the beginning of the year.
Yeah, like we're just discussing off camera. I mean, it's up 27% year to date, including last week's fall of about 4.5%. So, I mean, there's a bit of profit taking last week. We saw local investors mainly, reaping some handsome rewards that they've seen if they've piled in earlier in the year. Another factor adding to the momentum lower last week was the vote by Parliament trying to show no confidence in government. But subsequently this morning it has been resolved. They're not going to show no confidence in government, so it's doing okay today.
Okay, so from a political perspective, we saw a few reactions last week.
Yeah.
What is interesting to note is that the telecom sector and the construction sector are two very big key focus areas for investors. Are they going to remain in this space going forward?
Well, I think as long it's with the whole North African region. I mean, there's a lot of focus in Morocco with IAM, Morocco Telecom. So I think as long as talk with France Telecom continues, we'll see a lot of focus on the telcos in the North African region, yes.
Are you overall bullish on the Egyptian market?
Well, when the market rallies 25% in the first quarter of the year, you've got to stand back and take your breath a bit.
It's still not at pre-crisis
levels. No, I mean, it's still got a hell of a lot of way to go. Volumes are looking good, which is very good. I mean, we're happy to see that volumes are up, but it's mainly local investors, as I mentioned earlier. So I won't be surprised to see a bit more weakness, but not from a fundamental point of view, just from the fact that the market needs to take a bit of a breather.
So around 14 consecutive days of gains for the Kenyan market.
Yeah.
And last week, disappointing performance, down around 2.5%. Again, can we attribute this to just a bit of offloading on the companies and the stocks that have actually been doing well?
Yeah, definitely. I mean, the likes of Equity Bank last Friday was the last day to trade cum div in the name. So it's done exceptionally well over the last couple of weeks. We weren't surprised to see a couple of players take a bit of money off the table there in some of the bigger names. And this week we're also seeing a couple of the bigger names going ex-div later in the week. So yeah, I think largely to do with the good run we've seen in the bigger blue chips.
The rights issue for Kenya Airways, that has also been a very sore point for a lot of investors holding the stock.
Yeah.
It continues its downward spiral.
Absolutely. I mean, today when I looked at the name towards the end of the close, I mean, there were 1 million shares on offer and nothing on the bid. It was quite scary actually. So no one's quite interested to touch the name. Last week down 18.5%. I think the name's down about 35% or something like that year to date. So no, we're not looking too good in the name at the moment.
It is also said that the banking sector is expected to do well going forward, because we are expecting a much softer monetary policy situation. Is this your view as well?
Yeah, look, I mean, inflation seems to be easing a little bit. It's not on its rampant
still sitting
run
around
like we saw.
17%.
Look, I mean, compared to what we have, it's a hell of a lot higher. So not great by any stretch of imagination, but the shilling's doing a bit better. So sitting around 82, 83 to the US dollar. So that definitely helps inflation as well.
Are you bullish on the Kenyan market?
Well, look,
are you expecting a positive performance
I think
this
so.
year?
I mean, Africa as a whole is looking pretty decent. We've seen an uptick in volumes in the majority of the market, so we're quite happy about that.
Nigeria, we also saw a negative performance there, down almost 1%. We had FCMB also announcing a profit warning after UBA announced a profit warning over a month ago.
Yeah.
So it seems that some are saying that this is the bottom for the banking sector, that we've seen the worst and it's over now.
Look, I mean, some of the banks did well. Let's look at Access and Guarantee Bank from last week. They reported 50% and 30% increase in profit after tax, which was fantastic numbers. Likes of FCMB, they've had to write down a couple of their loans, etc., etc. So it's not surprising to see such bad numbers. Subsequently, they actually reported earlier today, after their profit warning, coming in with profit after tax of minus 9 billion, I think it was. So name trading down 5%, which is limit down in Nigeria. So a bit worrying there, but like you said, I mean, I think we're getting a washout of all the bad results in Nigeria.
Would you be buying into the banking stocks in Nigeria?
A couple, a select few. I think your big names, likes of Guarantee Bank, Zenith, etc., etc., your more stable banks, I would definitely be looking at it, yeah.
MPC starting today as well.
Yeah.
Are you expecting a bit of positivity?
Well, look, we had inflation numbers come out earlier this morning before the market even opened, came out 11.9%. Interest rates sitting at 12%, so we won't be surprised. General consensus of the market to see rates unchanged at 12%, so we're not expecting any move. And I think the fact that inflation for February did slow down to 11.9% supports that view of a rate hold.
All right, let's touch on Malawi, one of the best performing bourses last week, and up almost 1%. We saw some numbers coming through from Standard Bank, and they were positive overall. Is this enough to keep the momentum going in Malawi?
Look, I mean, The only worry with the likes of Malawi and Botswana, you'll see as well, was a decent perform on the continent. It's the liquidity constraints. One buyer can come into the market and push the prices up of various numbers of counters, which is what we have been seeing. I mean, it's been one large local institutional investor just buoying the market, but we're happy to see that the likes of Standard Bank reported some decent results. Yeah, so it all depends in if the names are there that these large buyers are looking for and there's liquidity, then I mean, the run could continue, you know.
Are you expecting liquidity to increase significantly in Malawi this week?
A very tough one, very tough one. Like I said, I mean, it's very much a block market. It's difficult to trade in it. So if the names are there on offer, then you know, it can continue, yeah.
So as you mentioned, pretty much the same scenario playing out in Botswana, where we did see a bit of gain coming through, up 0.3%, so pretty much flat.
Yeah.
Also good results, particularly BIHL coming out with some strong numbers.
Yeah, I think profit after tax increased about 42%, so looking rather good there. I mean, generally in Africa, what we've seen for financial year end results 2011 has been good results. So, you know, with the likes of FCMB, surprising to the downside, but generally it's been a good picture, yeah.
A very, very strong prudence fiscal stance that we see coming through in Botswana, and it seems that the government is going to put cap on wage increases. Is this a concern with regards to some of the companies that are operating in Botswana? Do you think that that could actually bring down the earnings prospects?
Yeah, look, I mean, there was talk of Giokos, et cetera, with the worries there and that. Yeah, it's a bit of concern, but I think it's also to tame inflation. While times are tough, you know, you don't want guys to go on spending spree so that they have to increase interest rates further down the line. It just causes further pressure in the economy, which is not needed at the moment. So yeah,
yeah, and Standard Chartered and Sechaba also last week had some positive results out.
Yeah, absolutely, looked quite decent, yeah.
Okay, so let's also touch on Zimbabwe, where we saw negativity coming through, and we saw the Zim mining index down 7.5%, the industrial index shedding 2.5%. Liquidity is also a very big issue, and it's not only from what we see in the actual market, but banks are also starting to experience a bit of a liquidity squeeze. Yeah,
well, just going back to the performance on the market firstly, I mean, mining index down 7.5%, quite disastrous actually, but as you saw, Zimplats conceded to cede 51% of their holding, I mean, Implats, sorry, in Zimplats at least last week. I mean, that caused major negative ripples across the whole market, filtered through to the industrial index. So I think investors were just kind of wary what's going on there. No one kind of likes indigenization to take place.
But Implats here in South Africa was relatively resilient, so Zimplats obviously coming under pressure.
Yeah, absolutely.
On the Zimbabwe market.
They came under a hell of a lot of pressure last week. But, you know, it's just a major worry that the government is actually not going to be able to fund. It has the capacity to fund the purchase of those shares. So I think that's just causing a bit of people to sit on the sidelines and just you know, take a breath and see what's happening.
When an indice drops around 7.5%, isn't this a good time to buy, would you say, or is it just too many risks in the market?
I mean, that's got to be taken with a pinch of salt in Zimbabwe. I mean, 2 or 3 names in the mining index, of which, you know, Rio Zim and Zimplats are the biggest names in, and when they trade, they move the market. So one trade, literally one trade a week can move it a hell of a lot lower.
On the industrial front, 2.5% lower. What are your expectations there?
Well, look, we've seen Zim for us is quite a fantastic market actually, because of the fact how it trades. Definitely a block market. We've seen a lot of interest come in over the last month or two. So I wouldn't be surprised to see, you know, as long as they can wash away with indigenization problems, we'll, you know, later down the year. I'm very bullish on the Zim market, to be perfectly honest.
What is your sense on the Mauritius All-Share Index? I mean, last week we saw it actually down around 0.5% or so. We saw the Mauritian government dropping rates by 10 basis points, 0.1%, so very minuscule there, but really citing the fact that inflation is looking slightly better. Is this going to feed through into the equity market? Well,
I hope so. I mean, they've had trouble the whole year. I mean, Europe's one of their biggest trading partners, if not their biggest trade partner, and as you've seen with the euro being so weak against the rupee, it's been difficult for Europeans to go and spend some time and spend money in Mauritius. So they need to drop interest rates to help locals start spending a bit more and just kind of find some way to kick off the economy, because they've really been struggling with their major trading partners.
We've seen these hotel stocks coming under pressure for the most part of this year. Is this a good time to buy, because they're sitting on very strong assets at this stage, and we are expecting a recovery to come through in the Eurozone, hopefully?
I think so, eventually. I mean, I think you've got to take a longer-term view in Mauritius, as with the rest of Africa. Yeah, so they're trading at a decent discount. We've seen some interest in the names, but very few and far between.